Trend analysis is greatly simplified when using candlestick signals and the T-line. The T-line is this black line, the 8 exponential moving average. The 200-day simple, the 50-day simple, and the 20-day simple moving averages are moving averages that every major money manager around the world uses on their charts. The advantage that candlesticks have is it shows you exactly what their decisions are at those moving averages. As we can see, our reversal started with a morning star signal and then followed by a doji sandwich, which we've cleverly named this the McMuffin, your morning star doji sandwich or morning sandwich, which is also a strong reversal and a strong indication there's going to be more upside. Once the upside started, where was your first target? The 50-day moving average. We also use the simple rule of the doji. A doji formed right on the 50. We know the simple rule of the doji is that it's going to move in the direction of how they open after a doji. So when they opened up positive, it was telling us that this uptrend was still in progress, another doji sandwich potential, and that the 50-day moving average was not going to act as resistance, making the next target the 200-day moving average. Now there's the combination that wasn't occurring here, where we saw candlestick potential sell signals confirmed, except for the fact that they could not close below the T-line. Past few days of last week's trading showed doji, shooting star doji, close to the T-line. Today's positive open told us the uptrend was still in progress. Had they opened lower, back below the T-line, that would have told us that maybe they're coming back down to test the 50-day moving average. At this point, we're in the overbought condition. We've had a nice uptrend. You can pretty well imagine that everybody and their brother is watching to see what it does at the 200-day moving average. As illustrated in the NASDAQ, it couldn't really close below the T-line, opening positive today and closing right at the 200-day moving average. This will also be indicative of how the markets are going to move tomorrow, that if they open this positive, pretty much telling us this little J-hook pattern is pushing us through the 200-day moving average, telling us there's going to be more upside. That same analysis works just as well on the short side. As we can see in the Wynn Resorts chart, when they failed again at the 50 and started the downtrend, the bearish harami, telling us that this downtrend was in progress, with stochastics heading down. And notice what happened even on Monday's trading. The Dow was up 300 some odd points. Wynn was still off $1.29 because it hasn't been able to get back up above the T-line. And AMBA represents that same thing, that they really couldn't get a close up above the T-line. The downtrend remains in progress. And once again, notice what AMBA did today with the market up 320 points. It still tells us that there are trends that are still in the downtrend as long as they can't get above the T-line. That'll be it. We'll see you in the chat rooms.